This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios as always. I'm Prashant. With me, my colleagues Sonia and Surbi is with us as well. It's a pink Friday, right?
Pink of health. I don't know if you can say that about the markets.
I couldn't resist that.
But you know, it's bright smiles this morning because finally it's Friday and finally we made it, right? Another week comes to a close. And somehow, I mean, this week felt rather long because of the way the market moved. It was so volatile and we came off from our highs. So in a sense, thank God it's Friday.
Always. Always thank God it's Friday. Well, you know, let's just kick off with what you need to know as we begin another trading session, right? Now, you may look at the last two sessions and say that the market has been sulking, but is that so? Broader markets are doing just fine, even as the Nifty and the Bank Nifty are sulking. And just take the last two sessions worth of change. The Nifty is down 1% in the last 2 days, but the Bank Nifty is down 1.6%. But look at the small cap index, it is up 2%. So the broader market is powering ahead, even as the large cap frontline indices, for one reason or the other, has been sulking. Focus on individual stocks, and we've been making this point over and over again, and not on the broader indices for the last at least 2 weeks or so. That has been the case. Broader indices need one or two large stocks to fire, if not a whole bunch. But the action beneath the surface in single stocks has been nothing but extraordinary and backed by volumes as well. That's an important point. Not just price action, but volume-led as well. We'll talk about many of these stocks before markets open. Let's just a quick word on the global cues as well. They're positive, global cues. Techs are the clear leaders. I mean, when I say technology stocks, I mean basically 6 or 7 stocks. And we put this data out yesterday, day before yesterday out as well. Basically, about 6 or 7 stocks are responsible for all of the US market gains this year. And last night was no different. The Nasdaq ended 1.25% higher. Good news, dollar is cooled off a little bit. So, there's an important zone which is between 103.8 to 104. It's an important support area. And we slipped. I mean, after getting to about 104.7 2 days back, we are under the 104, 103.8 levels. Watch for the weekly close. For the dollar index, it's always the weekly close which matters quite a bit. And, if we have a close around these levels a little lower, then that's going to be good news for the medium-term trajectory for the dollar. We get the US jobs data later today, and I think that will be perhaps the most important for markets to get a sense of what the Fed will do. By the way, last night, once again, we had speakers from the Federal Reserve reiterating that they would like to see, or at least they would lean towards a pause. But that's commentary, right? We've heard that for 2 days now, yesterday and day before. We had maybe the ISM manufacturing data came out last night. That was perhaps relatively also on the weaker side. But other indicators have been strong. The one single pain point is basically the labor market, which is strong. And I think tonight, out of the US, we get perhaps the most important data as far as the labor market is concerned. Coming back to the market here, just if you're looking at the Nifty on the downside should not breach 18,420 levels. That should be defended. The 20-day then comes in even lower at 18,338 if the uptrend is to be intact. The upper end of the rising channel stands at 18,800. That's about 300 points away from where we left off yesterday. So that's some distance away, but that's basically the meaningful kind of level to watch out for. And then, of course, it's the all-time high, another 100 points above that. Bank Nifty yesterday managed it. By the way, it breached the 20-day moving average. Intraday, it breached that. But by close, it closed above the 20-day. That number stands at 43,751. And that remains and becomes the important level, which the Bank Nifty must not close below. On the way up, a move above the high of 44,499 will signal more upside. So that's basically some levels if you're trading near term, both for the Nifty and the Bank Nifty, and how you should approach things. I think SGX is indicating a strong start, about an 80-point higher start. We get into these phases, right? The market moves up quite a bit. It cools off, moves sideways a little bit. I'm talking about indices here. And then we have a renewed push again. The broader takeaway has been that this is, whenever we see these pullbacks, it is within a broader uptrend which has not been violated as yet. Sonia.
Oh, absolutely. And, it's a very volatile market, but within largely a trading band, right? I mean, we haven't been able to break that upper end of the trading band, which is 18,600. This morning looks like it's going to be a very good start. The SGX Nifty is now at the highest point of trade. And as we've been telling you, it's largely the global markets that will aid the sentiment today. But the big question, the million-dollar question is there anything to take the market out of this 18,600 band? That is something that, remains questionable and doesn't look like it could be the case as of now. But for today, we work with positive cues. The US jobs report, this could be the lowest monthly gain in jobs since December of 2020. 190,000 job additions is what we're looking at, but it will give us some hint on what the next course of action will be from the US Fed. Now, the flows continue to be on the muted side. So after 8 days of buying, FIs have finally sold in the cash markets about 71 odd crores, while DIs have bought about 500 crores. So flows have also become a tad bit muted. I'm watching out for a couple of things in a couple of economic indicators. One is that two-wheeler makers have reported quite a decent set of numbers this time. So, add that to the list of positives along with, say, the pickup in GDP and the PMI data, which has gone up, GST collections. Now, two-wheeler sales have also come back. So, it's 7% growth for Hero Moto, TVS Motor up 9%, Royal Enfield up 22%. But the pocket that has gotten hit is commercial vehicles. And over there, Tata Motors could be under pressure today because of a double-digit fall that they've seen in their CV sales. So that's one thing that, the market could be a bit cautious on. But, Surbhi, this is a market that's kind of frustrating, right? Because at no point in time are you getting any indication that we could break out of this range.
Yeah.
Today, of course, start will be in the green, but then again, you have that resistance.
And that's what I'm saying, that it's so near yet so far.
Yeah.
It's just a psychological level, the all-time high. But the fact that we have taken so long to climb 1.5%, for me, there are certain underlying factors that indicate that there's a hint of cautiousness in the market. And we are seeing that play out. Now, macro data, especially in the US, has not been the best. But equity markets can stay completely disconnected from macros for long periods of time. In fact, weak macros end up being positive for the equity market. And we've seen that play out over the last many years. So the dollar drop that Prashant alluded to as well, that was the biggest drop we've seen in the greenback in one single month. Suddenly from levels of 104.5, we're down to 103, 103.4 or thereabouts. So that's one. The US manufacturing data that came out, 7th straight month of contraction in the US manufacturing PMI, the ISM manufacturing PMI that came in, a level of 46.9. So 7 straight months of manufacturing contraction in the US. And the jobs report today, the figure is 190,000. That's the expectation. But again, it's a telling story from highs of almost 250,000 and plus above that. We're looking at a number that, if it comes in around this mark, it would be the lowest in the last many years, lowest since December 2020. For the Indian market, once again, it was quite interesting to note that global markets were doing really well yesterday. Europe was up and about at the time when we fell, and we gave up a lot of gains in the last half an hour. So that's something that you can't exactly write off. Even this morning, I mean, look at Hong Kong. Hong Kong's up 3%, by the way, trying to make up for a lot of the lost ground yesterday. Very strong, momentum in Hong Kong and even in mainland China. That's the way some of these markets are trading. But will it rub off on us? Can we, get over this wall of worry around 18,600? That's the big question. Another data point that I want to talk about is the FII long-short ratio. And the FII positioning is is becoming a little more cautious. That's what the number tells you, because we're down to below 54 versus 60.7 just a day back. So the FII positioning in the FNO market is a bit cautious. And even in the cash markets, I mean, that number yesterday is a small sale number, so nothing much to worry about. But the fact is that they are net sellers after a massive May. That number, the net inflow number for May, is the highest that we've seen in this calendar year. So one critical question is that we've heard a lot of talk on FPI regulatory scrutiny being enhanced. The SEBI consultation paper, I mean, there are reports this morning indicating that some of the custodian banks could already start seeking additional information from clients coming in, especially from Mauritius. Because remember, Mauritius might just end up being classified as a high-risk jurisdiction. So these are some of the factors that we have to look at, whether in the interim, as these adjustments happen, whether there might be a bit of an impact on FPI flows. So I guess I would say that beneath the surface, the sense that I get is that there's some skepticism and caution in the market.
All right. Well, 80 points higher on the SGX this morning at least. It's going to be a good start. That's the SGX for you. Well, before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We get you updates from markets across the globe. Jahangir Aziz of JP Morgan will be with us with his take on how things are looking. That should be an interesting conversation. We get you CNBC TV 18's list of top 10 stocks for the day with our research team. At 8:30 this morning, we'll have Gurmeet Chadda of Complete Circle Consultants with his thoughts on the market.
Okay, we have a long lineup of guests joining us in just a while from now, so don't go anywhere. But on the equities front, first up, we have Chris Wood of Jefferies, who says that greed and fear is very overweight on the Indian lending sector in the Asia ex-Japan and global long-only portfolios. And the sector accounts for 32% of the India long-only portfolio, 19% of the Asia ex-Japan long-only portfolio, and 14% of the global portfolio. Now, this compares with the lending sector benchmark weighting of 3.9% in the MSCI All Countries Asia ex-Japan Index and 0.37% in the MSCI All Countries World Index. Now, this calls for a further adjustment in greed and fear's long-only India portfolio. An investment in AU Small Finance Bank will be initiated with a 3% weighting, which will be paid for by removing the investment in CAMS. This raises the lending sector's weighting in the portfolio to 35%. Interesting. So they're adding AU Small Finance and they're removing CAMS from their portfolio.
All right. Well, that's always an interesting note, the greed and fear note from Chris Wood. Some money market views as well. This is on the rupee. Lakshmanan V of Federal Bank says that despite dollar index at around 2.5-month high, rupee soared to a 2-week high yesterday on the back of strong domestic GDP data, complemented by manufacturing PMI, which came in at a 2.5-month high. Most of the major currencies were seen struggling against the dollar, with the Chinese yuan and Australian dollar trading at 6-month lows. All eyes are now on the crucial unemployment and non-farm payrolls data due later today, which will be key for upcoming FOMC due on the 14th of June. He expects the rupee to trade in the range of between 82.2 to 82.78 to the dollar for the next few trading sessions.
All right, and on the bonds, Lakshmanan V says that the bond market saw sustained buying interest through the week with good volumes. Lower US yields also aided to the sentiment. Buying momentum is expected to continue, and if the market breaks 6.97, he expects a sustained rally to 6.92% before the RBI MPC decision, which is due next week.
Okay, well, we also have lots of stocks to track and plenty of action to look at today. In just a bit, in our top 10 segment, we're going to be looking at names like Hero Moto, TVS Motors, Ashton Motors, Bank of Maharashtra, Aditya Birla Capital, Coal India, MOIL, Aster DM and NHPC. All those on the back of positive news flow. Tata Motors, actually, because with sales numbers, is the only stock that's on the red side of our tally today.